Hey, happy Wednesday, everybody. Welcome to the Closing Beat. Hope you're having a great day here so far. This is just a quick show that we do to cover the stock markets, the good, the bad, and the ugly for the day. Let you know what happened if you happen to be a long-term investor or someone that wants to just check in real quick, see what's going on. We do this class for our customers largely, but if you like to participate, that's cool too. Happy to help. And then if you're an active trader and you just like seeing what's going on as well, it's just a place you could stop by and get a quick update on the markets. Well, the lights are purple behind us because the markets are mixed. And any day that the markets are mixed, the lights show up as purple. So let's go over the markets today and see what's going on. Also, we have a class tomorrow. Very important to me to teach our customers. I have a lot of friends that are also financial advisors, and we chat a lot about customers and how we go about doing things and everything. And a lot of complaints from them where they say, oh, they were called and complained about this or that. And I'm like, well, that's your fault. You need to teach people how things work. And so every Thursday I do a class for customers, very similar to this, where I just turn on a camera and we get to work, a very short class. And we try to teach something new. If you want to see what those classes are all about, they're on our website under events. You can actually see the different classes coming up. Well, tomorrow we're going to focus on your personal finances, or personal accounting, as I like to say it. Very important that if the markets are going to be wild or maybe return a little bit less than expected, as many analysts expect, then it's very important not only that we're efficient as possible with the investments that we have, but also that we get your personal dough straight as well. So we're going to focus on that with one of the financial planning tools that we use. We call it the Nest Egg, and it's just a financial planning software that we offer our customers. And so tomorrow we're going to go through that and kind of show you how to set up some general goals and stuff in there so that you can get your dough straight as well. As far as having your investments efficient, we do things so much differently here. We actually manage our own portfolios. Think of them as our own personal ETFs or our own personal mutual funds without the cost. There's zero expense ratios involved, no trading fees, no commissions of any kind, and we use those with our customers to make sure we can achieve their goal. Well, that's the end of my sales pitch. Let's get started here. We've got the Dow lower by 22, the S&P higher by 2, the NASDAQ higher by 29 on the day. Sort of an interesting day if you follow it. The volatility is still there, even though the VIX was lower on the day by a little bit. That was largely because of the way the day finished. But all in all, the volatility is still there. We actually sold off, and the Dow is going to get the attention for this because it's a bigger number. The Dow sold off almost 600 points to get things started today. So quite an impressive rally. If you see at the end of the day, it was only down 22. I think most people would take that, if they saw their portfolios early in the morning. And so that's what happened. Now, there's a disconnect between the Dow and the S&P, and I always tell my customers and you guys as well, if there's a disconnect or something doesn't seem right, always ask why. Just pick and prod at every little question. I'm happy to answer it. Well, today the disconnect is largely Disney. So Disney was one of the sort of issues there in the Dow, holding things back. We'll cover that as we go here. Let's see if we can pop on over to the charts. There you go. Here's the S&P 500 just floating above the 200-day moving average. The S&P 500 is down about 4.5% just this month. And it's what, August 7th? I mean, we're just getting started here. So it gives you an idea of how aggressive the sell-off has been. We were down over 5% at one point, and we covered that on Monday, how often the markets are down 5% or more. And there's also a video that we did for customers in the dojo if you happen to be one of our investors here. So you got about a 4.5% decline on the S&P 500. If we look at the Dow, that's more near the 200-day moving average and technically holding at the moment. The Dow is down about 4.5% just this month already. Now, in the big picture, it's not really that big of a deal. Year to date, it's up a lot more. Just depends on where you hopped on or where you decided to start adding to your investments. But still, a loss of about 4.5% already on the month and trying to find support at the 200-day moving average. So far, so good. All that is really, the red line, is just an indication of long-term trend, right? The long-term investors just like to see stocks and markets or ETFs, index funds, whatever they may be, above the 200-day moving average. It's a sign of strength. And so even though we can have these wild back and forths along the way, as long as we stay above there, that's seen as generally positive for the overall markets. If I go over to the NASDAQ 100, you can see while that is the strongest sort of in the short term, it also sold off the most here so far for August, down about 5%, a little less than 5%, had about a 0.5% gain today. So what do we have here for the stock markets in general? We have an oversold scenario that started off this week, and we're just recovering a little bit from that. If you really zoom into this sort of excitement here today, you can see that when the markets tried to sell off, people were okay to buy that. The other day when the markets sold off right at the end of the day and the pressure came off of those, like we discussed there, the way the market makers had to position their trades, once that pressure came off, people were able to show their bullish signs here. And today that was the same thing. In the morning we sold off, people said, I don't get it. Why are we selling off? You scan the news, you look around, what's going on? There's nothing going on. And so we're still oversold, which represents a short-term sort of discount here, for those that like buying dips or whoever's buying that. All right, ETF-wise. There's actually numbers that track this every single week, and week over week we have $25 billion that have come out of ETFs, your SPYs and QQQs and things like that. $25 billion. What does that tell you? Money's moving out of the market and somewhere else. That's a big number, right? That's nothing to really sneeze at there. So it's a big number. Lets you know that a lot of those people that use the apps where they can trade quickly and everything, lets you know they panicked. Right? They just flat out panicked and they pulled their money out of the market. Horrible timing, right? Because they probably took it out at the lows. But 25 billion's come out. Now, in the grand scheme of things, it's not such a big deal because in June and July, $85 billion came into the ETFs, the big ones anyways. So you got $85 billion coming in, you got the retail money coming out, those of you that panicked and pulled your money out there. All in all, we're still net positive on the overall market as far as the bullish dollars coming into it. The focus today is going to be on bonds. If we go over here towards the bonds, we can look at the short-term notes. Big spike to the upside today. Early this morning, everybody's like, holy cow, we're going to be the next country to have negative rates. The bonds are headed towards zero. Well, they were just overextended here in the short term. So you got just that bit of overextension. You can't see it because I'm just moving my hands and not the charts. There you go. Little overextension in the short term, and that pressure to go ahead and take some of their profits came in throughout the day as the markets found some support. As far as the rate cut in September, remember we've got two more Fed announcements, believe it or not, going into the end of the year, September and December. And so far in September, there's now a 74% chance of them cutting rates by another 25 points going into September. And believe it or not, traders are betting on another 73% chance that they'll do it again in December. So not just like one or the other, they're betting on both rate announcements being cuts to the downside. Holy cow, you thought that was all over. We're just getting started here again. So you got bonds shooting to highs, meaning rates shooting to lows there, at least to start the day. If you look at the longer term bonds, here's your 30-year. Same concept there, hit their lowest point in years, right? Just incredible how sharp they moved to start the day. Big moves to kind of continue with this rally. But again, in the short term, too far, too fast. You've heard me say this millions of times. If a stock, an index, a market, an ETF, whatever it is, if it goes too far, too fast, Bitcoin to be another example, too far, too fast is a bad thing. If you're a bullish investor, you want slow and steady. You never want too far, too fast because people will come in and decide to take some profits there, which is exactly what you see going on in the bond market, a little bit overblown to the upside. No problem. In the Dow here, you got 600 points off the low. Big rally up off the low. And again, the disconnect there was Disney. It sort of held things back. It was your worst performer in the Dow today. They reported earnings. They missed on earnings, missed on revenue. Streaming services. They're trying to grow that and build that. And so the streaming services still has increasing losses. Also, the August earnings report typically is quite weak for them. It is their weakest out of the year, to be honest with you. And like we said yesterday, only 20% of the time is the next day after they report these earnings in the August time period. Only 20% of the time is it positive, so a lot of people expecting that to be lower, and it was today, no big deal. In the Dow, strength got the money today. Really, anything that was already strong. We mentioned McDonald's yesterday. That's what you're looking at now here. Oh yeah, you can see it. So McDonald's got more of that strength today. People just going and saying, if I have to put money to work in the Dow, and that's their job, that's where they have to invest, they're going to go find the strength. They're not picking on the weak side of things. They're picking on the strong side of things. Because again, they have to justify that to either their investors or they have to justify it to their boss, right? So money went back into McDonald's. And Coca-Cola had a good day as well, almost 2% to the upside. Again, you can compare the sort of midterm here of Coca-Cola to the Dow. And you can see it's definitely much stronger than the Dow, right? Different picture altogether if you're just like comparing charts there. But I'll leave that up to you. If we go over to the NASDAQ, you got the gaming stocks still higher today. Take-Two Interactive got about 4% gain on the day. EA Sports, although it's a really weak stock, you can see they're really not doing a whole lot of anything, at about a 2.5% gain on the day. And Activision, ATVI is the symbol. For them, they also had a 3.25% gain on the day. I believe it had something to do with them volunteering to put warnings on the labels of the games. Bother. So those are your leaders there in the NASDAQ as far as that goes. Okay, sector news. Let's go over to the sectors. Financials. XLF is the ETF I'll use for that. A little bit extended here in a short term. They were lower. Now, financials in general were held back by JP Morgan and Bank of America. So JP Morgan down 2%, Bank of America essentially down 2% as well. The reason why JP Morgan and Bank of America have the most exposure to lower interest rates, meaning it will affect them the most out of all the large banks because of how they do their business. And so Bank of America, JP Morgan were the laggards in the financial space here overall. Now, if you go over to regional banks, and I'll use the KRE today, one of my picks to use there, 1 1/3% to the downside. They always get hit lower or hit harder on lower rates because, as we've said before, the regional banks don't have much exposure outside of their general lending. They don't have trading desks. They don't have all these extra features and bells and whistles because they're smaller. They're not really at that point yet. And so the regional banks need the higher interest rates in order to make a higher profit. And when rates sort of shoot up higher like they did today, well, regional banks are going to take their lumps on the day. So that explains that one for you. Crude oil, interesting little drop here in crude oil, a little overextended, at least to start the day. It hit new lows. It's Wednesday, so if you ever see crude oil volatile on a Wednesday, it has to do with the inventory reports. We were expecting a drawdown, right, of about 3 million barrels. I forget the number, about 3 million barrels, right? And instead, we got a surplus of 2.4 million barrels. Okay, right? If there's more supply, should price be higher or lower? Well, it should be lower. So initially, crude oil started off the day to the downside. I've left a little line here for you. We could delete these other ones, but I left the lines here to show the technical nature of crude oil. Those of you that don't believe in technical analysis, well, follow this line here. This will be at least something that'll keep you focused on that. I'll just maybe extend that. So people are waiting for this downtrend to break, to come in heavy. Unless there's some sort of aggressive sell-off that justifies a sort of discount in the short term, you can pretty much expect that you're going to see most of the action start once we break over this downtrend line here. So just wanted to put that out. Also, the EIA, that's the people that put out the oil inventory report. So they also reported, if you just dig a little bit deeper in there, that they expect general consumption for the rest of 2019 and 2020 to be a lot less than expected, which means there could be more oil supply if people aren't consuming as much of it, and so therefore the price a little bit lower there, at least in the short term. Oil is a very volatile product in the short term. Long term, it's a very trending, consistent sort of product. If you like to play along. And so because of that, you got, boy, old XOP just can't catch a break. This is almost multi-decade lows. I mean, I can't say multi, it hasn't been around that long, but over 12 years it's been since it's been lower than this current price right now. So is that the definition of a downtrend there? Anyways, it hit new lows today. Same thing here. You've got traders that say, look, I don't know, where's the bottom? If I want to try to pick an interesting spot in this, I can't really guess where the bottom's going to be, and so they're using this trend, and I'll just extend it out here so we can follow it over the next few days. But they're using this trend to kind of highlight their decisions. Anything above that downtrend sort of gives a temporary, not all clear, but kind of clear, right? And it gives at least the first opportunity for someone to justify why they bought a downward trending sector of the market or area of the market. So XOP a little bit lower on the day. I thought that was just something interesting. We keep pointing these sort of areas out. You watch this show for like 4 or 5 days and you're going to know this is strong, this is weak, this is discounted, this is overvalued. I like to focus on that stuff. Anyways, you got silver bursting the new highs here today. Holy cow. So up 4%, but if we just do a little something here and we go out as far as we can, look at the performance of silver. Before you get all excited and say, this is the way of the future, man, this thing's going to be great. You have essentially dead money for the last 4 or 5 years now. It has really done a whole lot of nothing. So that tells you that this is probably best reserved for the active traders, those that like to be in and out, because as far as an investment goes, you're just hoping, if anything, that you did find the bottom. If you didn't, then you potentially have money that's sort of just going to float around and maybe not do too well for you, but that's up to you. You make that decision. We'll move over to gold. That also spiked higher on the day, a little extended now in the short term, so you got a little profit taking there. And when gold moves too far, too fast, just like everything else, likes to take a little bit of a break, and so sort of understandable if it does that. Because rates were shot lower here to start the day, you've got things that are interest rate sensitive, did quite well today. XLU, although it floated back there near the close, that was one of the higher areas of the market. And REITs had a good day, added about 1% on the day, and some of your 52-week highs that we mentioned yesterday were also strong again on the day. We'll cover a few more of those here in just a minute. Now, I'll tell you, if you really want to geek out on this stuff, you got the tech sector and the semiconductors. The tech sector and the semiconductors almost didn't budge today when the market was lower. Remember, this is a little tough because initially the markets were lower. I'm going to just bust over here real quick. Okay, let's do this. So if I go over here to, let's just even say the SPY, right? You got this initial sell-off to start the day, the gap lower and a big sell-off on the day. We go over to the tech sector, you got the gap lower and it barely budged. It had a hard time selling off. It started rallying sooner. So early on in the day, I was like, hey, that seems like it's holding up pretty well. If we continue to stay lower, it's a tough one to say that it would. But remember, it's right at support here. It's at a technical area that everybody loves to look at. And so I thought it was interesting that even though the markets did sort of wash out to the downside here today, that's a dangerous word, but even though they did start to sell off to the downside, your tech and your semiconductors barely moved. You can even see it here just to start the day. There's just this tiny little tail on the bottom there, so not much of anything to be worried about there. If you're focused on those sectors or you have those, then you're kind of excited to see that. I'm not saying it's a buy or anything. It's just, it's nice to see when your area or your investments hold up like a McDonald's and everything else is a little bit weak, of course. Energy also, of course, weak. You know, there's every day we talk about this one. It is the most oversold area of the market week over week. We mentioned that yesterday as well. Utilities are the least oversold area of the market week over week, if that helps you as well. All right, you got 15 new 52-week highs today. CME Group, we mentioned yesterday, poking up to highs. That continued a little bit today, 0.25% higher. Nice strength there on the CME. And then you have the REITs, a lot of REITs in there. Extra storage space from yesterday. That had another 1.5% today. Public storage space also gained again on the day. REITs is what we're focused on here. American Tower, a real popular REIT, that poked to new 52-week highs. You could just, Welltower is another one I remember. Yeah, Welltower hit new highs. So REITs getting a little bit of a boost there, all because of those lower rates and excitement there. People wanting to put money in a strong sector with a reason. I mean, that's just what it all boils down to. You don't have to. You don't have to dig too deep today to kind of see what happened. You got 34 new, 4 utility stocks were also in the new highs list as well. So you can see that those two areas pretty much dominated in terms of the strength there. 34 new lows. And again, a lot of them, they are going to be your oil service stocks. We don't have to keep picking on these guys, but there's Apache sitting at new lows again. You got Cabot Oil, broke to new lows. That one's probably the most oversold out of all of them. So some weakness there. Schwab was your biggest loser out of the 52-week lows today. Schwab fell down 4.6%. A bit of an aggressive drop there in the short term. So Charles Schwab just struggling a little bit. And that was your worst one out of the group today. And then you had a little recovery from that International Flavors and Fragrances from yesterday. They had their earnings announcement. We pointed out just a wild drop there. It did hit new lows today, but probably had the best recovery. No, it did have the best recovery of all of those in the mix there. We'll go over to some of the stocks here, and then I'll take your questions if you have them. You got the New York Times. Big move on the New York Times, down 12% here today. Missed on revenue. Boy, that just erases like 6-7 months worth of gains there. That's not cool. Match.com, yeah, that's the website there. Match.com up 25%. They added 1.5 million people on Tinder. They own Tinder and OkCupid and Plenty of Fish and things like that, and as well as Match.com. Even some news after hours here, but whoa, 25% because of 1.5 million more people on Tinder. Ooh, boy. Beyond Meat's 3.5% on the day, trying to recover a little bit. It's holding in that 160 area because of that secondary offering there. That you know how I feel about that one. You got Tyson, of course, trying to move a little higher at another 1% on the day. They're the next competitor. They're grabbing sort of the headlines there. Wendy's, yeah, the fast food company. They're a public company, and 8% on the day. Strong little bounce there, higher on earnings to help you out. And Lyft, after hours, reporting a great earnings, by the way. They beat on earnings. Now, they lose money. You guys know that. We've covered this numerous times. They lose money, but they were expected to lose about $1.70, $1.75. They lost 68 cents. Okay. You know, give them a little credit for that. They lost half of what everybody expected them to lose, and revenues beat by $50 million, meaning they had more revenue by $50 million than was expected. That's pretty cool. I believe the chief financial officer said that they're seeing an accelerated path to profitability. So strong words there if you're a CFO. You don't normally volunteer that on a conference call or on any sort of press release. And their revenue per active rider, I thought was pretty high. I don't know what the average estimate was, but revenue per active rider was $39.77. I thought that was good. I have nothing to compare it to, but that makes me want to go compare it. They also raised guidance there, so Lyft, much stronger after hours. And that's that one. Oh, CVS was higher too. CVS Healthcare, higher by 7.5%. A lot of credit to Aetna there because they merged with them. So, hey, not too bad. All right, we'll take your questions if you have any. In the meantime, if you want to play a game, bottom right-hand corner of your screen, you just go to jazzwealth.com, guess the Dow, and take your guess. Where you think the Dow is going to close next week. If you're the closest without going over, we'll send you $100. No strings attached. Promise. Yeah, Roku did well also with earnings. I didn't catch all the details on that one, but they did do well. Yeah. So I don't have like a take on it. You've got Fidelity National. They've just been gobbling people up, man. I mean, left and right. In their space, they've been gobbling people up. This sort of stands out a little bit aside from that with the WorldPay exchange there. $11 a share. $11 a share cash. I see what they're doing there. Yeah, I mean, I don't really have anything to offer that other than to say Fidelity National's decided, hey, the way we're going to grow is just go spend all our money buying other people. That's one way to do it. You know, popular in the financial advisory space. Instead of going and finding customers, they just go buy them. Yeah, it's popular. You've got an American Express high yield. It's been 2.1% for almost 1.5 years. Good. You like it? You're happy with them? I always like listening out to what people say there. Nice. Uber after hours, are they kind of gigging on that? That tomorrow is their earnings on that one, I believe. But if they're getting a little sort of help with the excitement, 40. Yeah, a little bounce there on the Lyft news. Nice. Is it possible we can drop back to December lows? Absolutely. Yeah. No reason we couldn't. That would be, if anybody wanted to try to mark the top in a market, I would think most people would call that a top at that point, given where we're at now, right? iSpark says he got his pension check. Should you open a traditional IRA? I can't tell you what to do with that, man. If you do decide to open an IRA, then keep us in mind. But you got to do what gets you to that goal, right? You've got a goal, you've got an income need, you've got to do whatever that answer is there, right? It's not an opinion. At the end of the day, I'm like really passionate about that. So many people will take an opinion and say, well, I'll just invest in dividend stocks or I'll just invest in REITs or whatever. But the question is, does that get you what you need? So really start there with that, because if me and you happen to talk, you know I'm going to focus on that first, just as a heads up. Veronica, no such thing as a high yield cash account. I would almost beg to differ. I can't say anything just yet, but I would almost be able to disprove that. Sorry if I missed some of your questions there. Thanks. So you enjoy the channel. I enjoy you watching. You think algos lifted the market or investors buying cheap? No real sign of that sort of program trade throughout the day. You'll know when you see that. I'll point it out anytime I see it. There's no real sign of that today. Today was just money moving into strength and moving into, obviously, things that benefit from those lower rates. And gold and stuff as well. Now, gold's tricky. Gold is fickle is probably the word there. Gold can be a nasty bugger if you chase that thing, so be careful chasing gold. Broadcom could be halted. I saw that news come in there. It could be halted because of that, unless they're just up and running on now. Because of that spread, see the large spread after hours, it could possibly be halted still. Yeah. Could you do a video about using your IRA for land or property? Real simple, you can. As long as it's not for your own personal gain, you can. You need you are the custodian. You would be the administrator and everything. You do need a plan administrator, though, if you want to do like a self-directed kind of an IRA there. Yep. And be very careful. Very careful. Mess one thing up and the IRS is not going to be happy. Yep. Cool. Nice. Can you use a Roth IRA to buy bonds? Yeah, why not? Sure. You can't buy like art, stamps, insurance, things like that. Yeah. What do negative interest rates do to bank stocks? Well, you'd have to study globally for that because we can't say that that's happened here. So we'd have no comparison. We'd have no historical argument to say one way or the other. You'd have to study Germany, something like that, to kind of see what's going on over there. Germany, I think their rates went negative. Their 2-year was negative 0.55 today. That was a record. Lewis says, is there such a thing as saving too much for retirement? Absolutely. People get excited. I mean, it happens, right? We've got a lot of customers that give us a shot here, and some people get really excited and they put too much in, and really they should probably save some of their money. And so we try to catch that and help you not overcommit. And one of the ways we do that is just figuring out exactly how much it's going to take. What's your goal? Give me some data, and I will figure out exactly what it's going to take. That's the second thing I do for every one of our customers here so that they know those dollars are what is needed. Any other dollars, now we can have some fun. We can go talk about your emergency savings. We can go talk about investing in things that you're passionate about and things you want to take a shot on and things once those dollars are met there. So, yeah. What are your thoughts on averaging down investing as a strategy? For the long term, really, what is your other choice, right? Because your IRAs are limited, you sort of have to average in, and even if you say, well, I could just put the full 6,000 or 7,000 in, well, you're still going to do that again next year, so it's essentially averaging one way or the other. I do know that a lot of our customers, and myself included, like to increase their amount that they put in. If you're just going every week and you just put some dollar amount every week, I know we like to increase it when the markets fall. That's just exciting, right? There's no bad that anybody can say by someone doing that. We're not timing the market. You're just going about your business. You just see a discount. You increase your deposits a little bit. I like that. That's kind of what I normally suggest. So just out of curiosity, if there was some weird ETF that invested in art and stamps, that'd not be a good idea. Would you been able to hold it in an IRA? Not technically. I mean, if there were, you could, if it's an exchange-traded product, you could technically put it in your IRA because you're investing in an exchange-traded product. There wouldn't be an ETF, though, investing in stamps or arts or whatever, because what would there be? You'd have to invest in like Christie's or something like that. So it would be a very limited ETF, which is why it probably doesn't exist. And aside from that, there are ETFs that have insurance companies in them, and you can invest in it. You just can't buy insurance with your IRAs. Yep. Like life insurance sort of thing. Would it be wise to roll over bonds before more rate cuts? Would it be wise to roll over bonds before more rate cuts? If you think they're going to cut rates more there? The problem is you'd be taking a loss on them, right? You'd probably be taking a pretty severe loss if you did that. So answer's probably no. Given the volatility and what's just happened, like price-wise, almost everybody that would try to do that would probably have a loss. You would most likely have a loss, unless you've had them for years, but then that's not the question you're asking. I ramble sometimes. Can we find a bottom in Chinese ETFs before the trade deal happens or have to wait? Oh, so this is tough, right? This is largely why I stay away from the biotech sector. How are you supposed to know the news? Like, it's so tough to know when something's going to happen there. So it's a very, very tough question. I would be guessing if I gave you the answer, and so I prefer not to guess. I like to use data. All right. I think we basically covered it for the day. I hope you've enjoyed joining us here. We'll be back tomorrow, of course. And if you're one of our customers, tomorrow night we'll do that class using Nest Egg. I hope you'll join us there. If you can't make it, it's always in the dojo, along with every other class we've done privately just for our customers, available in the dojo. And maybe, just maybe, some changes coming in the dojo there to make it even more interesting. Have a great day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.